Hey guys, welcome back. In this episode, we're about to jump on an interview with my buddy Willy Woo, who is another crypto OG that's been around for a while, and his expertise is fundamental analysis and on-chain data for Bitcoin and other cryptocurrencies, and just a really smart, great guy who's been in the space for a long time, and yeah, let's just jump right into it. Willy Woo.
How are you going there?
Hey man, how's it going?
Yeah, great. Oh, let me turn my camera on. That might help.
Yeah.
Oh,
How are you, brother?
Oh, great. It's been an exciting week. Very exciting week launching the newsletter. Great uptake. Yeah, I'm amped.
Yeah, man, it's been a huge week for Bitcoin and crypto, and it's always good when the price is popping off, but even better I think is when you got developments like what just came out with PayPal. And
I was just saying, I was talking to Glassnode trying to get a number on just how many people are in Bitcoin. Like, you can detect it through the addresses and the clustering, and it's not like we have many addresses per person, trying to figure out just how many people are in there.
Yeah,
because we got 350 million people in PayPal, and I want to do that comparison. I think it's ridiculous news.
yeah, it's huge, man. Well, hey, listen, thanks for coming on. I was thinking about the last time that we saw each other, and I think that was here in Austin during like the depths of the bear market in 2019. And I remember you saying like, man, the on-chain fundamentals are really bullish. And I think we're going to break out of this like depressed range. I think it was like in the 3,000 or 4,000 range.
Yeah, that's right. I think we did a lot of work. David Poole and I did a lot of work trying to figure out what the bottom was. There's a whole story in itself. Because everything was bearish. All volume was bearish. On-chain volume was bearish. Yet any indicator that we had created that did not rely on actual volume on-chain actually started to look bullish. And there was this mismatch. And so we ended up doing a whole lot of homework. Eventually, on a rainy day, I managed to figure out a new way to figure out what volume should look like and back check what data we were getting from, it was bitcoin.info at the time, and it was completely flawed. And I don't know what, they haven't updated that metric for a long time, it seemed. And so when we back checked it, it said, oh, it's bullish. And then not long after that, Coinmetrics came up with their new estimates, and it was like, oh, that's bullish. And then it was the final piece for us to be confident. And so I remember that quite clearly. It was a bit of an adventure.
Yeah, man. Yeah, you nailed it. So what have you been up to since then? I know you've been pumping out a ton of tweets about on-chain stuff and fundamentals, and just launched your newsletter. And what else is going
on? That's pretty much it. I think it's for myself. I've been doing this stuff since 2016 full time, looking at as much data as I can get my hands on, and that's branched out into on-chain analysis. And now it's become an industry. Like, I think there's about 5 providers of data now. What's changed for me is that I wanted to move it into a formal vehicle. I think, when I go onto these podcasts, people say, this is Willy Woo of whatever. And it used to be Adaptive. But before that, there was no title because I was just an independent researcher. And by launching the letter, it's been great because it's now this vehicle, which is I'm beholden to, and I needed that. I now have, a supporting base of people that I'm beholden to provide timely updates and new on-chain research, which is my work anyway. But now it's forced me to be much more methodical into it. And so for me, it's been absolutely awesome because now there's this platform and I can do what I want to do, which is do open research and give it to everybody, retail, and not have the stuff just held by a hedge fund. So that's the main thing. And I've got a whole bunch of new stuff that I'm working on right now. But ultimately, what I'm seeing is essentially number go up, but it's not reflected in price, even with the latest price pump. Maybe it's Bitcoin being on PayPal and it's a FOMO pump, but actually underlying it is some ridiculous fundamentals. There's been $2 to $2.5 billion of coins scooped up off the speculative loading on exchanges.
Yeah.
Never seen that before. You always see a little blip of coins scooped up, locked up into cold storage. Hodlers are coming in, scooping it out, and then that's always the start of the next bull run. We saw that in 2016 before we exploded into 2017. We saw that at the 3,000 to 4,000 bottom, and they were like little bits.
Yeah.
This
and this like dwarfs. Yeah, this like dwarfs all of those, right?
This is nuts.
Yeah.
I've never seen anything off the scale like this. It's like it started in January, February. It was around the time, the timeline that MicroStrategy, Michael Saylor gave for when they started looking into it and getting all the board approval, which ended up with SEC approval and then actually market executing that. But actually, what I'm seeing is that around that time, there was a steady scoop up of coins. And obviously, I was told by an OTC head that these guys swim, whales swim together in a pod, I guess.
Yeah.
And so obviously they can buy before they get the approvals to buy for their corporation. So, and they're very highly connected, so highly networked. And I think like what I'm seeing there at the start of the year and all these coins coming off the exchanges being scooped up into cold storage is essentially the signature of these guys. The next generation of high net worth people coming in to buy it. We had the same happen at the ETF in the 2016 with the Winklevoss ETF. It was actually the very first time that Bitcoin, I don't know if you recall, it was like Bitcoin was a dirty name. It was drugs. It was dark markets. It was Silk Road. And then suddenly it popped up in the Wall Street Journal as, a legitimate investment vehicle. And no matter that the ETF failed to get approval, what we saw was another scoop up of coins. And that was that wave of high net worth Wall Street Journal readers starting to take an interest, the open-minded ones. And now we've got the next scale, which is the boards of and CEOs of companies scooping.
Yeah, it's interesting because the first 10 years of Bitcoin has been dominated by retail primarily, right? And I feel like the next decade is going to be dominated by, corporates, institutions, and then maybe even sovereigns.
Oh, absolutely. I was just doing the figures earlier around just how much money is in the sovereign wealth funds, and it comes to $8.5 to $9 trillion. We've got $5 trillion sitting in corporate treasuries, and they're all looking for. Well, we know the corporate stuff. The corporate treasuries are already starting to enter. This is also the cycle. From the information that I have, the sovereigns have been looking at it for well over a year, very first of them. And we're at that point where I think they've done enough due diligence. So I think this cycle is actually the cycle where you get the first of that $8.5 trillion coming into Bitcoin. And actually they have to, because they cannot have an optimal portfolio without the properties of Bitcoin.
Yeah. It's like you're being irresponsible at this point if you don't have some Bitcoin in your portfolio, right?
Yeah, because as much as everyone says it's correlated right now, it's actually about to break that. And it always was the uncorrelated asset. And I think what we'll find with Bitcoin is that it is a safe haven. It is a hedge. It is also a Armageddon asset that will do well if everything goes to crap. But then on top of that, it's a high growth startup like maybe Amazon, maybe 5 years, 10 years ago. So you get these two kind of properties. One is it's a safe haven, which is great for now. And then even if it's not a time to be in a safe haven and the economy is good, you've got this high growth because it's software swallowing the world, and finance is going fully internet native. So both sides you're winning on, and that causes this decoupling, like that adoption of software completely consuming the digital, finance into the digital age. That's going to push a decoupling no matter what. Day to day, we see this correlation. We see SPX goes down, Bitcoin goes down, but over the long term, that kind of startup growth will decouple it. And then if you're looking at it from a portfolio manager's view of at least a sovereign wealth fund, you need access to this kind of movement against the rest of the market.
Yeah.
To optimize your portfolio. You just do.
Do you have an opinion on central bank digital currencies? Do you think it's going to help? It's going to hurt? It's going to be irrelevant? Like, do you have a leaning?
I mean, all I know is, I was reading Roll Powell and he was laying it out, right? And, in one sense, I think that I kind of agreed with him. I think that in one sense, it's quite interesting because what it creates is that a central bank now has full control over transactions across the economy. Before, it was kind of beholden to this banking infrastructure, and now it's tightly held, and it's very centralized, which is scary as hell to me. But because they now, if this takes off and if they launch digital currencies and it's accepted and we start to send money to each other through their fiat-based digital currency, you can do some really interesting things. And I think right now what's happening is, there's a lot of issues. What I see, one of the big issues of this time, when I say this time, I mean the next generation, 25 years. The major problem right now is that we're moving into this digital age, and a nation state can't control where it gets its taxes from, because people can just hop around and people can make money anywhere in the world. And we have these heinous, crazy tax sort of, you got KYC, AML procedures that everyone's trying to lock down. All nation state governments trying to lock down where the flows of capital are going so that they can tax us. And in this other sense, I think maybe like you could do something like you could actually do something like just a tax on transactions, a very thin one. No one has to get bogged down with, I spend I think I spent $2,000 in the last year to do nothing other than to comply with KYC and AML, just moving accounting firms, for example, or my legal firm saying we now have to KYC you even though we've been working with you for 12 to 14 years. Like there's all this crazy shit in the economy, which is put the burden onto everybody, and there's a way to make that efficient. And so I see those possibilities, and then there's this Orwellian argument as well. And then the great thing is that there's this ecosystem, and there's also Bitcoin, which is the new kind of version of gold. You could opt out in the old banking system, and even banks themselves have gold asset backing because it's not controlled. It's apolitical.
Yeah. I like how Tim Draper says it. He's like, governments are going to have to start competing now for our talent and our tax dollars. And, You know, if somebody is wealthy or has the means to move around and a government treats them better somewhere else, you know, they're going to be able to do that freely and openly. And I think that's kind of interesting. But on the central bank side, I'm like, man, you know, are they going to fight Bitcoin? Are they going to accept it? Is it going to be able to work in parallel? That's kind of an interesting thought experiment that I think we're going into right now.
You know, I think, you know, I think this, you know, talking to friends in the industry, the really smart ones are saying, you know, when we talked about Libra, Facebook's Libra, it was like, that's bullish Bitcoin. Actually, everything's bullish Bitcoin.
Yeah.
Like, okay, you've got central banks. They're now doing digital currency. Oh, it's legit. Now you can choose. Now you've got billions of people making that choice instead of fringe.
Yeah.
And so, yeah, I think in that regard, it's bullish Bitcoin. Bitcoin just needs to get a lot bigger. And it's just, I mean, to me, you know, and I've been in startups for what, over 2 decades. And I know how risky startups are and how much growth they can get. And to me, what I see with Bitcoin is it's way down the track of quite low risk. It's a foregone conclusion that nation states will back their asset base with some amount of Bitcoin because they already do with gold.
Mm-hmm.
And we're in a digital freaking age, and that's undeniable. And you need a digital store of value. And so the gains that we've got right now, like we're still something like 50x to 100x or even more from where it needs to be. Those kind of gains you don't get in the startup world.
Yeah.
With the amount of risk you're taking. The risk is so low now compared to the amount of ceiling. So, anyway.
Yeah, it kind of feels like we've got like this slingshot that's like being pulled back right now, and it's just ready to shoot. That's kind of how I feel, you know, not just with like market sentiment, but also with, you know, the chart and some of the on-chain stuff. And I wanted to ask you about that because that's, I guess, like your area of expertise is the fundamental kind of on-chain, you know, metrics. And I know a lot of people don't really look at that type of stuff, or they just don't know what's important. So I wanted to ask you, like, what are some of the most important, I guess, fundamental factors that you look at, or things that you think have the biggest insight into either the growth of the network, or, you know, maybe some market timing type indicators, anything like that that you think are just really powerful that people should not ignore?
You know, I was saying earlier on another stream that I was going to write a book on fundamental on-chain analysis. These are the indicators. Bing, bing, bing.
Yeah.
This is how they work. And you know, I was talking about this over a year ago with David Poole. We were looking to collaborate on this, and then what happened was everything, all these indicators started to change because the rate of innovation in the space is so quick, and the changes so quick. You know, we were tracking this flow of capital, suddenly it moved to, you know, more people started to trust exchanges, Mt. Gox blowing up, you know, that's forgotten. And so there's all these constant dynamics. Like now we've got side chains, we've got the liquid side chain taking volume off. Ethereum's now got, you know, you might look at volume in Ethereum, and now a whole bunch of it's not tracked because now it's wrapped Ethereum in ERC20 and it's being flowed into DeFi, and your metric is just changed. It's not just Ethereum moving on the chain. It's all moved into smart contracts, and so all I'm saying is it's massively changing all the time.
It's a moving target, basically.
So it's a constant moving target. We've got some age-old indicators. We've got MVT, MVRV. We've got a whole bunch of jargon words, but essentially there's some basic ones that you can look at. You can look at realized cap.
Mm-hmm.
In plain English, what that means is looking at when these coins moved and figuring out what the price when they moved. All right, so this is my charts. Chartswooble.com is really, it's kind of always a work in progress. This is where I put new research, charts, and so I'm constantly updating it. And like the price model is probably the most popular in way. So essentially, this page is showing us different ways to value where the organic price of Bitcoin is. So I can turn off a bunch of stuff, and let's just look at first the market price. Let's turn off the top. That's in a different model. VWAP realized. So this tracks. This was first invented by the team in Coinmetrics, and they looked into the age of coins sitting in wallets and when they moved in, so that you can figure out what they paid for it, and then they work out a capitalization instead of market cap. There's a realized cap, and what I've done here is move it back into the price domain, and you can see right now everyone's in profit because $6,355 is what the entire market paid for their coins, and currently it's at this is yesterday's data, just below $12,000. So you can see, for example, that Bitcoin investors are underwater almost never. A bit underwater there, a little bit underwater there, a little bit underwater there, and a tiny bit in the COVID white swan crash. Just managed to hit it. So whenever it's underwater, you want to buy, because Bitcoiners are not in loss ever, hardly ever. So that's a really good metric, and you can do a lot of extra things with it. But essentially, that's one to look at. That's like an organic price floor, and then
I love how that lines up with like basically after a bubble deflates and you go into an accumulation period, it lines up perfectly with every time that's happened.
Exactly. So my friends David Poole, Murad, did the ratio to market cap, and this is another mainstay, which actually you're essentially dividing one by the other, and you get this, right? Every time it goes low, it's undervalued. You can see there it just dipped, and it dipped below one. One is where 1-to-1 ratio is where you go from all the Bitcoiners in profit to the market now being in loss. And whenever you dip below there, just buy.
Just buy.
Just don't leverage long 100x. Just buy.
Yeah.
And just don't worry about it. You'll win. That's some of these are the basic stuff. And so we've done more complex models. Like this is one I introduced about a year ago, and this models the price floor. It's based on essentially when coins move from old hands to new hands. New hands, they've now valued it higher because if I bought at 12 cents. Well, I don't, it's different from if I buy it from $6,000. Essentially, at $6,000, that creates this kind of new price floor. Is like, man, I'm not going to sell my coins until, I bought at this price. So it's a new generation. I'm not talking about traders. I'm talking about hodlers.
Mm-hmm.
The hodlers that believe in it, they're not going to sell at the new price they bought in at. And this tracks this using the concept of destruction, essentially the concept of looking at the time in which these coins traded hands, and you can see this price floor hitting every bottom. So that's another one to look at. But essentially, just you can go through the site. The one that I've just been working on lately is this valuation model. I think it was really the first on-chain signal that was created. If you look in, so going back to the point, MVT ratio is I think it got a lot of, well, it did get a lot of attention when it was first announced. MVT ratio, the easy way to think of it is the price earnings ratio for a stock, but this is for Bitcoin. So in a stock, you have the market cap valuation, or the share price, and then underneath it, you have the earnings that's been created for that share price, and you get that ratio. And the earnings is a proxy to how much activity, profitable activity is happening underlying a company. And in Bitcoin, it's not a company, but we're an investment network that, like, it's like gold. It's a store of value network. It doesn't actually produce, you can argue, you can produce very useful utilities, but the valuation of Bitcoin is mainly based on essentially investors coming in and holding it as a store of value, being exposed to the economic properties of Bitcoin. And so what we look at is the investment churn, the velocity, the amount of investors coming in and out. And when you get a high amount of on-chain volume, and that's essentially investors coming in and going, I want exposure to it. Obviously, you can't get exposure until someone sells them a bit, probably a little bit of their stash as the price goes up. You see that. And so when you do that ratio, and I will show you the Bitcoin volume versus network value. So this is the ratio, the chart. The blue line is the chart of the amount of volume in US dollar terms going through the on-chain, on the blockchain, and the red is the market cap. And you'll see that there's this very tight correlation, and there's a fundamental reason for that. And I need to write that article, but it's based on first principles that the more investors that come into a store of value asset, the higher it goes. And it should be a one-to-one relationship. And where we deviate, so these points where there's more volume and the market cap isn't reflected in it, that means that the market's undervaluing it. And so that's a basic, that MVT is one that I think people should look at. It's a valuation of Bitcoin based on essentially a price earning ratio. And you can see, in these zones here where it's really low under these bands, you want to buy there, you want to buy there, you want to buy there. It's basically the market underpricing Bitcoin for the underlying activity that's happening. You even see this bit here, which is like all new companies have a very high price to earning ratio because there's a lot of future speculation. You could say it mimics that, but actually what's actually happening is there's ridiculous amounts of buying going on here that's not yet reflected in the valuation. So yeah, that's one.
Yeah, I love these tools. This is something that you don't have in stocks, right? Where, you can look at fundamentals like, earnings and debt and things like that. But with an asset like Bitcoin, to actually see the flow of capital and, metrics of like oversold, overbought, and how accurate it's been over the past 10 years, it's just really, really impressive what you put together.
Absolutely, Chris. It's like, I was like going, the people, on the gold camp, I was like, you can't actually see the real churn of gold moving hands.
True.
Yeah, we see all of this, and we see it block by block, 10 minute by 10 minute. So it's ridiculous. And, I pulled this chart up to kind of show what's really happening in the market right now. So this is actually MVT, what I just showed you, price earnings. But what I've done here is I've mapped it back onto a price domain. So this is where Bitcoin's undervalued. The price is in black, blue is MVT, and then this is where it drops off a cliff, and then price lagged it, and it had to come back down. And what's happening with all of this scoop up of coins and new investors coming in is the new investor activity is ramping up, and you see it squeezing.
Mm-hmm.
It's coming up and it's squeezing. It's provide a floor on price, and generally what's happening. If you were to look at what's happening in Bitcoin over, I'm pretty well tuned to looking at shapes of charts now, and you'll see this very nice organic shape of the price chart. It's very organic.
Mm-hmm.
And then suddenly in this zone, spoiler alert, BitMEX comes along offering 100x leverage, and they start to ramp volume, and suddenly you see whipsaw, up, down, up, down, up, down. So we're currently in this age where the volume on derivative exchanges, where you're just taking bets against each other. I could do a 21 million. I could do a 21 million Bitcoin long position, even though there's not even 21 million Bitcoins in existence.
Mm-hmm.
And so, like, the derivative markets is just essentially people betting against each other at extreme volumes, beyond even what the supply can even provide. I'm going long 1 billion Bitcoins. I'm being hypothetical because you need to back that with collateral.
Sure.
Presumably, if you've got a few $1 billion to play markets with, you could actually go long with leverage, more Bitcoins than that in existence. And so what you get here is some ridiculous amount of volume in these derivative exchanges that overpower the organic spot markets of real investors coming in. And so that's led to this sort of whipsaw as traders. Obviously, Chris, you're a trader and you know all about, defensive lines, support lines, stop losses. And so it's just a game, a strategic game. If I want to go short, maybe I'm going to take out that defensive line. I'm going to sell down and push it below the support, and then immediately I know that I'll get liquidations, and I'm going to dump.
Yeah.
And then immediately the thing spikes, and so we see this now in this whipsaw game. We saw this in the 3,000 to 4,000 sort of accumulation band, and at this point they squeezed it. That point happened at 10 a.m. Bali time, Hong Kong time, which is the lowest volume traded in the 24-hour zone. So the cheapest to push it through one of those strategic, defensive lines, and it squeezed it, and it just kept squeezing because the market kept shorting. So the whales kept squeezing them out until the market decided, okay, I'm going long, and that created the top.
Yeah,
So
that's what happens a lot,
zone.
isn't it? It's almost like, shorts add buying pressure to the price. A lot of people don't understand that. Like, the more shorts that pile in, if the trend is going to continue, that just adds fuel to the fire. And we also see that in altcoins, right? Where things just rip like thousands of percentage points because people are speculating against it, and that just adds to it.
Absolutely. Essentially, the markets are controlled by the richest and the smartest in the room, and they put the price where they need to because they've got, I call it ammo. We call it ammo. They've got more ammo than anyone. So if you've got enough ammo, you can push and you can push. I think some of what the CFTC is doing right now is they're coming in and cleaning up this game, this unregulated space where you can do a lot of things that are outlawed. You can buy wall, essentially spoof something. I'm buying, $6 million is about the size currently of a wall, and I'm just going to keep moving it up, and no one's going to sell into that because they, if you want to short into a $6 million wall coming up, and it's a wall, it's a fear wall, it's a scare wall, right?
Yeah.
No one wants to do that unless you've got, maybe $10 million to call that bluff. So it's like that. And, But what the interesting thing that's happening right now is this crazy era of derivative dominance. The more the volume's happening here, it's starting to subside with the likes of the spot investors coming back. It's the micro strategies of this world, the high net worth investors coming in, and what this chart is really showing is, you know, how we're whipsawing and it's just moving so far out of what the organic valuation is. Now the organic valuation is creeping up, the volatility is dampening, volumes starting to move towards spot exchanges. If not now, I think like a lot of what this is happening is we're under a lot of resistance, right? Technical resistance. This is all a technical game, and meanwhile the spot organic price is kind of a wall of death from the hodlers.
Yeah, to me it feels a lot more sustainable this time. You know, like you were talking about in the 2017 bubble, a lot of that was driven by just over leveraged derivative trading, where like now if it's driven by, you know, real institutions buying and then pulling that off of spot exchanges, that just seems a lot more sustainable and bullish long term. And
Absolutely.
and I agree with you. Like, you know, the regulators are stepping in and they're trying to clean up things like BitMEX, which I think ultimately is a good thing long term, because if the regulators know that there's price reliability and there's not these, you know, Wild West exchanges that can swing the price, and, you know, whatever our beliefs are about the KYC thing, as long as they feel good about that as well, then we'll get more like ETFs and more sustainable derivatives and maybe even more volume on the existing like CME Bitcoin futures. What do you have any thoughts on that?
Exactly. Actually, the CME Futures is, it's actually trading decent volume these days. Mm-hmm. It's like two of the top 10 derivative exchanges are, two of the top 10 exchanges include Backed and CME, and CME's and it's way up there. Even though the crypto world doesn't acknowledge the regulated exchanges, which is interesting.
Yeah.
But I think it's something like ranked 3 and 5 in terms of volume. So that certainly the regulated space is ramping up. And, I see that as like the growth of the gateway to access mainstream retail.
Yeah.
So when the mainstream retail will need an easier interface than what's currently here, they probably just want access to an ETF essentially because it's the interface they're already using.
Yeah.
And we need a significant amount of capital to come into Bitcoin. I think people are not fully aware of the amount of capital that needs to come into Bitcoin to move Bitcoin now. Bitcoin is ridiculously liquid. It is way more liquid than gold for its given market cap. Mm-hmm. Its liquidity base is in the region of gold's largest market, gold being 50 times bigger than Bitcoin. We're trading volumes similar to gold's largest market for 1/50th of the valuation cap. So this thing is ridiculously liquid. And with that, it means that you need a lot of capital to move this up. Mm. And the current research I'm doing is that it's a 4-to-1. If you put like $1 into Bitcoin, just from the inelastic or the demand and supply, and not enough people selling into that, Bitcoin goes up in value per dollar invested $4. Wow. And Fundstrat's a research firm, pretty much came for hedge funds, and they did a measurement on the crypto space as a whole, not Bitcoin. And they said, this was in 2018, I believe, they said the ratio was 20 to 25 to 1.
Wow.
Like $1 into crypto, 25 times growth in market cap. But in Bitcoin, it's 4. So that shows just how much capital it can swallow, which is actually a really good thing.
Yeah.
If you're a billion-dollar fund, you want it to swallow capital so you can get in without it just squeezing upwards and you're chasing the price. So that's that. But for us to get to essentially Bitcoin, I'm just saying we need to get to $1 trillion market cap, because we're 1/10 of the way to superseding gold. And at $1 trillion, that's just kind of an eye-opener at that level, because all major asset buckets are measured in $1 trillion denominations. If we can get to that, and then we become a legitimized asset base.
Mm-hmm.
And that means that we need shy of, what's the market cap today? Something like
200 billion, call it 250.
Yeah. 200 billion, probably it's gone a little bit more, but let's just call it 200 billion. So we need $800 billion of market cap growth to reach $1 trillion. If you take the 4 to 1, that's a $200 billion that needs to actually come into Bitcoin. Push us into that. And it works out as $50,000 Bitcoin, $55,000 of Bitcoin. So that's a lot of capital.
Yeah.
Well, a lot of capital.
You know what I find really interesting is right now, I forgot the exact percentage, but Grayscale alone is like sucking up a lot of the new supply. And I think they've like tripled their AUM in recent months. Like it's incredible to see. And that's just one fund, right? So what happens when we do get ETFs and when, bigger corporates and sovereigns start to come in? I mean, I think that's why this next wave could be more sustainable than like the 2017 bubble, which was, like you said, primarily retail and leveraged derivatives. This is real HODL capital.
Yeah, this is the one, like I remember in this zone, I was in a Telegram group with a bunch of people, and I remember talking to Chris Spiniski in this zone saying, well, actually it was in 2016, it was like, this is the bubble where the mainstream wakes up to knowing Bitcoin, and it's going to go ridiculous. And then the recollection was that, but that's not, because we were at 1% of the world at that point being exposed, if that. And like all that would mean is that people see Bitcoin, everyone knows Bitcoin's there. But this is the cycle where they have actually a legitimate vehicle that they can actually action on without being, essentially pioneering person who wants to figure out, addresses, private keys, cold storage, address, sending to address. It's just sending money to exchange. It's a very, if you were to look at, if I take my family and my older sister, she's not into tech, and she's like, too hard, forget it, and it's when she can buy, that's our unlock, because she's mainstream. We're outliers, we're pioneers here. So this is a cycle where the mainstream can get access, whether the mainstream is board of directors of public listed companies saying, can we buy Bitcoin, versus the average person with an E-Trade account just saying, can I push a button and get access to the exposure of Bitcoin? Exposure is all we're talking about here. I'm not talking about the sovereign nature of holding your private keys, which we talk a lot about in the space. I'm here talking about just the general public getting exposure to the economic properties of Bitcoin.
Yeah, even if, apps like Robinhood, and maybe I saw somebody even saying like PayPal, they're not actually going to allow you to like move coins off PayPal or whatever. Even if it's not perfect on those platforms, it, like you said, it still gives access, right? And it still introduces people to it. And once people have some skin in the game, then they're going to talk to their friends and their families are going to be like, wait, what do you mean, Uncle Jimmy? You don't have any Bitcoin in your retirement portfolio, or, you're not invested? Like, what's wrong with you? And I think the more those conversations happen, the more mainstream it becomes. And like you said, the more acceptable it becomes to hold it in your portfolio.
Like I'm thinking in terms of the deeper side of Bitcoin, because we're all early adopters here. And so we're all understanding the sovereign nature, the decentralization side of it. What we're seeing now is, Bitcoin has always been a number go up marketing scheme.
Mm-hmm.
So you go number go up, greed takes hold, you go, I can make some money out of that. And then you do the further research and you go down the rabbit hole of Austrian economics, you go down the rabbit hole of being sovereign to being your own bank. All that sort of stuff happens after number go up. I don't know if I've met anyone that wasn't interested in number go up first before they learnt about the fundamental ethos of Bitcoin. And I think that it's really this kind of mind virus, and I think it's a good thing that like as purist as maybe crypto Twitter gets, being exposed to Bitcoin, whether it's through an ETF without holding private keys, whether it's through Robinhood, it's through PayPal, through Revolut, and you can't even pull those coins off. You're exposed, but the main important thing is people start to then put attention space into what this thing actually is. And I think there's a lot of education that's going to come out of that, and it's the same thing. Number go up, then learn about essentially the decentralization side of things.
It's like you come for the profits and you stay for the freedom.
Yeah. Well, as Naval was famous for saying is, Bitcoin is freedom from oligarchy and tyranny dressed up in a get rich quick scheme.
I love that, man. Yeah. It hype pulls people in, they make a little bit of money, and then they're like, oh yeah, you know what? Maybe the system is rigged against me.
Yeah, maybe there's some more important things.
Yeah.
So yeah, and then I think I tweeted in 2018, Bitcoin is freedom from tyranny and oligarchy, dressed up in a get poor quick scheme.
Yeah, man. Well, yeah, I love the work you're doing, man, and I'm excited for your newsletter. And I know a lot of people in the space respect you, and it's been really cool to kind of know each other from afar over the past few years. And I guess one question I have for you is, like, what are you most excited about? Like, what use case of Bitcoin are you most excited about for like the coming years?
The most, it hasn't really changed. My view of Bitcoin has been that we're going from industrial age to digital age. Everything we've been offered so far online is just masquerading as digital, and Bitcoin is fundamentally internet native. It's internet programmable money, and that's probably the most interesting unlock I can see for Bitcoin. And it's even beyond Bitcoin. Like, people think I'm a maximalist. I'm not. I just only want to recommend things that are, there's a lot of scams in the area. You need to have your wits around about you.
Yeah.
But so I recommend Bitcoin, but there's so much internet native finance happening right now. And I think Bitcoin's just this really cool part of that. We can transact robotically. Software can move coins. I think that's the bit that I'm really interested in is where you're saying, what am I really excited about? What I'm excited about is the unknown. It's like the 1993, 1994 version of the internet. It's like, we freaking don't know what the hell this thing's going to, it doesn't know what it wants to be.
Yeah.
And like Steve Jobs was famous for this analogy that when radio was invented, when TV was invented, the first shows on TV was radio shows with pictures, and it took 20 years for us to invent the sitcom.
Oh, wow.
And he predicted that in the 1990s, while the internet was like this new form of medium, that we don't know what that medium wants to be, and it'll take 20 years for it to come to fruition. And that turned out to be social media. The new media of this age is social media, and it was internet driven, and the internet decided what it wanted to be. And so we're currently in the 1990s of Bitcoin and crypto. We don't even know what it wants to be. Everyone's doing radio with pictures. Let's put the current financial system onto the internet, but we have no clue, absolutely no clue what it really wants to express itself as. So that's the bit I'm most excited about. And I don't know, it's not like any feature. It's just like the unknown is the most exciting bit.
Man, that's such a good point. It's like every day there's so much innovation and so many changes happening. And like you said, I mean, most of it is going to fail and a lot of it is scammy, but it's such an interesting time to just think about money and what it could be and like what the future holds for this. I think it's like probably the most interesting time to be alive in the history of humanity. Because
oh my God, we are so blessed, Chris, to be in this time. It's awesome.
Yeah. And for nerds like us that are really into this stuff, like I couldn't think of anything I'd rather be doing or talking about or, exploring on a day-to-day basis.
Absolutely. Likewise. I'm right there with you, man.
Awesome, man. Yeah. Well, so where can people connect with you? What's the best way to get access to your stuff?
Okay, so Woonomic is my Twitter handle. That's the best way to engage. I'm constantly putting out a lot of my research there. All of the work I do, it ends up there. So follow me there. You can go to my site, which you can see, chartswebull.com. If you feel like you want timely interpretations of on-chain data, market intelligence for your investments, feel free to sign up to the newsletter. A lot of that is supporting the public work I do to essentially do more research and put it up to the retail space for free. A lot of what I want to do is kind of equalize the balance between the asymmetry of the research that's proprietary in hedge funds to Bitcoin. I just want to keep things more symmetrical rather than the asymmetrical advantage. So thank you.
Yeah.
That's it.
Love it. Well, I'll link everything up in the show notes here. And man, I can't wait for the borders to open up and we can all go like hang out in Bali or something.
Oh, that'd be great. Me too. Absolutely.
Yeah. I know Tone had an event scheduled. I think it was in Bali. And then I guess like that was right when COVID was hitting and then the world went on lockdown and it was like, okay, I guess we're going to be tied to our home offices for a while. But when that opens up, man, we got to have a massive crypto party.
Yeah. Well, I think he's rescheduled the next one in Mexico early first quarter, maybe April, March, something like that next year. So, it's going to happen.
Yeah. Cool, man. Well, hey, thanks again for your time, brother. And, looking forward to the stuff you put out in your newsletter. And, yeah, man, guys, go follow Willy. He's a badass. And, look forward to doing this again soon, man.
And likewise, I've been following you for a while there, Chris, and you just run an absolutely great group there. And I have friends that are in it, and they only speak highly of the work you do. So,
Thanks,
it's great when you see people operating with high integrity in the space. And so, again, recommendations back.
Yeah.
I tell people to follow you, join your stuff if they need, that sort of trading kind of learning journey.
Yeah. Appreciate it, man. I feel like we have just a great community of like both OGs, people that have been here since the early days, and also new people that are trying to get in and do things the right way. So yeah, it's a fun journey.
That's awesome, man. Love your work.
Yeah, appreciate it, brother. Well, good luck to you, man. And I'm going to jump back into the Bitcoin price. We got a breakout happening right now. So,
really? Already? All right, let's go to that. Catch you later.
All right, brother. Take care. See ya.
Yeah, bye.